countries in North Africa started to realize that there is a huge opportunity and a huge consumer market in sub-Saharan Africa, and they started to approach that. I think also the AFCFTA will definitely play a role in that, because again, especially this times, I mean, in the world we're seeing like this tariffs and customs wars, and US increasing the customs on many countries and so on. So a lot of companies that struggled into maybe export to the US due to these changes, they start to see, okay, I mean, we are a country in Africa. Africa is 1.5 billion, and we have this regulation saying that they're removing customs and everything. So they automatically started to look towards this market opportunity.
Hello, one and all, and welcome to the Afribond Sessions, the show where we discuss the latest trends and topics shaping Africa today. I'm your host, TJ Owajomalo. Now, you just saw that preview, me speaking with Sherif Nessim, the founder and managing partner at Jedar Capital. We talk about his career path, all the way from telecommunications to forming a syndicate of investors to forming Jedar Capital. We'd also talk about Jedar Capital's ethos, the trends when it comes to the African market in 2026 in the VC space, as well as the relationship between North Africa and Sub-Saharan Africa. So without further ado, let's jump into it. And we are back. Thank you, Sherif. Pleasure to have you on the Afribond Sessions. First, how are you doing, and where you are at the moment? I know you're always traveling, so how are things?
Yeah, thank you for having me, TJ, and Happy New Year. I'm doing well. Getting into 2026 with some optimism and positivity. Hopefully it'll be an epic year for everyone. I'm back now. I'm in the US. I travel quite often between US and Egypt and somewhere in Africa usually, but I think for the next month or so I'm settled here.
Awesome. Now I hope you had a good travel and good holidays as well. Like you said, Happy New Year. And I thought it was important to have you on, just because when it comes to Afribond, it is about, of course, Africa and the trends there, but we don't focus too much on North Africa. I feel that there is quite a lot that needs to be done in terms of connections. But nevertheless, I'm sure we'll go and jump down there. But sure, if you could maybe just talk about yourself more and maybe some of the work that you've done and how you got towards Jedar Capital, that would be great.
Yeah, absolutely. So maybe I will start with a bit about my background. I'm originated from Egypt, born and raised there. I studied engineering at Cairo University. I graduated back then when mobile phones was just starting, back in 1997 or 1998. And I joined a telecom and technology group in Egypt. It's called Orascom. And I spent 5 years with them, first in the enterprise sector. So mainly I was focusing on voice and data solutions, mainly. Back at that time, if you want to call your bank or the telecom operator, usually you have to call a number and speak to a human being. That's the only channel. There was no other channels. So we used to do the call center solutions, helping mobile operators as well as banks and the industries where they expect a high volume and inflow of calls. And then after 5 years, I moved to the telecom side. So I left the enterprise world, and then I moved into a subsidiary of Orascom Telecom. So mainly Orascom Telecom is very similar to, again, if your audience are more familiar with operators across Africa, so very similar to MTN, for example. But they were focused more on emerging markets and North Africa, as well as some parts of Sub-Saharan Africa under a separate brand called Telecel. So my job was actually in a value-added services subsidiary. So our job was to work with the mobile operators and help them develop mobile value-added solutions for their consumers. Again, this is anything other than a person calling a person or sending them text. So it's a very wide range of services, and I think I was lucky because this gave me like an exposure to the entertainment industry, the content, music, video, as well as the utility kind of thing, how to deliver messages via or informational services by SMS or IVR systems, all the way till the payments as well. So it's really a very wide range of services. And one other thing is that the DNA of Orascom Telecom as well at that time was really focusing on the underserved markets or emerging markets as well. Many of the countries where we operated, actually, Orascom was entering the market and getting a greenfield license to build, in many cases, the first private sector mobile network. Many countries didn't have any mobile presence before. Others just have the incumbent, which is usually the government-owned mobile operator. So I think this gave me exposure to emerging markets from Southeast Asia, Pakistan, Bangladesh, all the way covering most of the countries in Middle East, especially North Africa. So we had operations in pretty much every single country in Middle East. We had relationships with more than 40 mobile operators. We were not only serving Orascom Telecom operators, but in any country where we operate. So Orascom Telecom, of course, operator is a customer, but then we also serve other customers as well. I spent quite a long time. I joined them as one of the early employees. I wasn't really part of the founding team, but I was treated as part of the founding team. And I think the leadership in Orascom Telecom is kind. They love to see like ownership from the employees, so they try to tend to treat them as part of the company, where you have this flexibility maybe to try things, do mistakes, learn from them, and you really have this flexibility that you can feel that you're really running your own company, and you're trying your own things that you want to try in whether it's expanding in a specific market that you see an opportunity in, or thinking about the product and saying, hey, I have this product in mind. Why don't we develop it and then we go and launch it in this country and so on. So I stayed with this company for more than 15 years, from 2005 till 2020. Learned a lot, and I think this is where I started to develop my understanding and maybe passion for the global south, the emerging markets, the underserved markets, the bottom of the pyramid. I mean, everybody names it differently, but again, the opportunity in these developing markets. So yeah, that's probably my journey as probably a tech operator. It's how I transitioned into venture and startups. This happened actually gradually. Part of it wasn't really planned, but again, I always had this passion for small companies. At that time, they were not really named startups. It was just a service provider who has this product, and they're struggling with how to distribute and market them. And our job at the company where I used to work, which is the mobile value added service, was really trying to find a service that we think can differentiate the mobile operator. We can go tailor it and then provide it to the operator, and the mobile operator offer it to their consumers. So I worked with a lot of startups, small companies, small service provider that they have a service, And for me, it was like a win-win for everybody. I mean, we're bringing innovation or innovative solutions. For the startup, it's a great go-to-market, plan to go and partner with one of the mobile operator. Easily, you can be in the hands of hundreds of thousands of users in a few weeks, which is very hard to do on your own as a startup. You need to spend a lot of money on advertising and marketing and so on. And for the mobile operator as well, it was an edge because they bring some new innovative services that can differentiate them against other mobile operators in the market. So I started to be passionate about this kind of startups, and I started to help them later on, maybe around 2013, 2014. Not necessarily to bring them into the company to launch a service, but I felt that, maybe you're not a fit to tailor your product and offer it to one of the telcos, but I would love to help you. So I started to help them by connecting them to other maybe partners that can fit them, investors if they're fundraising, helping them with their pitch decks, helping them with their financial model and business models and so on. Then 2015, I got the chance to become an LP in a fund in Egypt. It's called A15, which again is affiliated to Roscom Telecom in a way, given that the largest LP was actually the family office or the family business of the founders of Orascom. And also they brought all the assets of the companies that they started and brought it into this fund. So I became an LP, and at that time I was very curious about venture and startups and investments. And I reached out to the GP of the fund. He used to be the CEO of the company where I used to work, so practically my boss. And I started to get involved in an informal way. I wasn't like a formal venture partner or anything. I wasn't compensated. It was just access, trying to ask questions and get to help them if I can with referrals maybe, or in the deal flow, or looking at companies that they're looking at and learning. And after 5 years, I decided, that's what I wanted to do. And it happened at the same time in 2020, I relocated. I moved to the States, based on the East Coast. I'm in New Jersey, New York area. And again, I moved during COVID. So I think I look at it as probably the silver lining around COVID time, that when I came, number one, again, I was moving after working for a long period of time, 15 years. So I felt that I needed this short break, maybe to think about what I want to do next, and also think about what I want to do in venture. Yes, I tried this and I liked it and I'm passionate about it, but I wanted to be more structured on how I want to go around and build something around VC. And I think I was lucky, because if I came during normal times, not during COVID, probably I would have joined maybe, again, corporate America. I would find a job in one of the mobile operators there, and probably I wouldn't have approached this the way I did when I moved. So again, when I came here, I joined a couple of programs as well around venture capital. Again, I thought that I want to learn from where VC was invested, invented, or started actually. So I joined a couple of programs, and then I decided, okay, I mean, I will start my own VC firm. But rather than going directly and deciding to raise a fund, I came across the syndicate model, So I decided, yeah, that's a nice way to start. I had some angel investments portfolio. I had my position as an LP in a fund, but I felt that there is something missing between being an angel investor and then jumping directly to raise the first fund. So I decided to run this as a syndicate first. So I established Jedar Capital and started to build a network of people who see the opportunity in emerging markets, believe in the opportunity there, and they want to invest in emerging markets, but they don't have access to deals. They don't have the time to maybe look at uh, 10, 15, 20 companies every week. And they don't want to get high financial exposure. They want to invest in maybe 3, 4 startups every year, but they want to do small contributions in every startup, and they want to select the startups that they are excited about. So again, I think all these were fitting into the syndicate model. So I started to bring people who are interested, and from then, from 2021, I think this was the beginning of Jedar Capital. I was doing this full time, so I didn't do any other thing other than really building the firm, building the network, and building the relationships and my knowledge, and uh, connecting to the local ecosystems in different markets, specifically Africa, but we also looked at some other parts in emerging market in Pakistan, Bangladesh, Middle East, essentially countries where I used to work in my previous job. This was the beginning. I'm happy maybe later to discuss more on the syndicate model and the investments we did during that time.
Yeah, no, excellent. Very extensive career that you have. So very interesting tale from how you've gone from all the way to telecommunications, all the way to running your funds. And we can jump into that syndicate model because I really do find that interesting, especially in the last couple years, where especially in the African VC space, you saw at times the amount of funding to funds and to startups dropping. So it's interesting to hear about the syndicate model, and I know you briefly mentioned about some of the benefits, but why did you see that it was more beneficial to you to raise money in that way rather than fundraising? And what was maybe the people that you were attracting? Was this more people that were already in your network, or did you branch out and just naturally find people via the normal course of networking?
No, when I started, I think it started with definitely people within my network, people that know me, know that I moved to the States, I'm interested in startups. These were probably the first 50 members that joined the network club or the syndicate, I would say. But later on, I started to, do a lot of probably content marketing without realizing I was doing content marketing. I was talking because this was my passion. I was only talking about this on LinkedIn or other social media channels. What's going on in Africa? What's going on in emerging markets? What startups are doing? Which startup is raising, and so on, and sharing news and some topics around this area. And I think people started as well to be curious and then start to ask questions. And from there, I found that this was like a lead generation tool where I started to get recruit people outside of my network, but they're curious about emerging markets. They want to invest in emerging markets, but they don't want to do this directly. Many of them were actually people or angel investors in the US. They have invested in the US, maybe globally in parts of Europe, maybe UK, Latin America, but they have never explored Africa. Some of them are keen, but they said we need to learn first. So they joined the syndicate, start to get every month maybe a deal from the syndicate, and there were a lot of learning for them. They learn from every startup that we share, from every deal memo that we share. We also used to conduct a webinar with the founder. So whenever we are bringing a deal, we do the due diligence, we share the investment memo or the deal memo with the network. And then we do like a 1-hour webinar where the founders come and pitch for 15 minutes. And then we open it for Q&A session for the rest of the hour. So there were a lot of learnings, and many people actually, when they joined the syndicate, they were very clear. They said, you know what, we know nothing about Africa. Probably we will not invest, but we're keen to understand. And these people, maybe they didn't invest in the first maybe 10 deals, but after seeing this, they said, you know what, now we have a different perception about Africa. You corrected a lot of probably misperceptions that we had on the continent. And I think deal by deal, even if they are passing, but they're learning from every investment memo, and they think, oh, we didn't know that there are, this strong, fintech solutions. We didn't know that you have this mobile payment solution. We didn't think that e-commerce exists. So they were learning about Africa, and I think after few probably webinars with the founders, you start to build your own conviction and feel, yes, there are businesses that are actually worth investing in, and especially that they're angel investors. They can spot probably what they need to see, so they started to jump in. And the reason I think I went to this model, back to your first question, I think this was the fastest thing, because I spent a lot of time working with founders before starting the syndicate. And all of a sudden I find that, you know what, I'm ready to invest. There is this company, I did the due diligence, I worked with them for maybe 6-8 weeks to assess them. And if I have the capital now, I would love to write the check. But thinking about if I want to go and raise a fund, this is it's a long process. From the time you start, you set up the fund, and you go to fundraise and hit the final close or the first close even. It's a like 6 to maybe 18, maybe 24 month duration. It's a long duration. So I wanted a platform that can enable me to start right away and build the track record as well. Because every investment you do, I mean, I'm doing it again with Jedar Capital name, and it's a fund. It's investing other people's money, which is typically what VC funds they do. They invest the investors or LPs money. So and again, in the US, I think the platforms that enable setting up the SPV were many platforms for that, very efficient. It took me like probably 48 hours, 2 days. I had the SPV set up. The bank account is opened and up and ready, and we're ready actually to receive money from investors. And also it's a regulated model in the US with the SEC and the FINRA and all these financial bodies in the US. So again, that's another part probably that probably brought credibility for especially US investors, because they're familiar with the entities that we were engaged with. We also decided to use an SPV administrator that is at that time was the top SPV provider in the US. Most of the angel investors definitely have came across this platform if they've been investing in the US. So I think it made the job a little bit easy in terms of credibility as well.
No, definitely. I think what you said is really important. And as a summary, I'm thinking of getting an investor's foot in the door, especially when you are talking to investors that don't really have the knowledge of investing in Africa, like you said. And then potentially in the future, they're able to get an investment, or you're able to get an investment from them, and for them to allocate capital into your vehicle and making it as quick and easy as possible, that syndicate seems somewhat easier rather than using more of a complex fund. So credit to you, and great that it's been successful. And yeah, we can move on to Jedar Capital then in general, and let's talk about just the work that you do in terms of where you're invested in, geography wise and sector wise too. I think the audience would find that very, very interesting. So if you do so.
Yeah, sure. So again, as a syndicate, we did 18 investments between 2021 and 2023. And again, as I said, when I started the syndicate, we were really sector agnostic, and I wouldn't say stage agnostic. Majority of our investment were really early stage, probably the seed stage. But again, the beauty of the syndicate is as well that you're not tied to a specific thesis, because we bring the deal to the network and everybody is actually free to either participate or maybe decide to pass. So, but we focused more on early stage. Majority of the investments actually, so 14 out of the 18 were in Africa. So we did invest in Egypt, in Uganda, Kenya. We did an investment in Cote d'Ivoire. We invested in 3 companies in Nigeria. We did South Africa as well. So again, really Pan-African kind of approach, touching the 4 different regions across Africa, doing different sectors as well. So we did like, again, marketplaces, fintechs, all the way to maybe health tech and a biotech company, which is an interesting story as well. And I think it's one of the edges of the syndicate as well. And we did 4 investments in Pakistan and Bangladesh. So in total, we did 18 investments. And again, these were 18 separate SPVs. Before, deciding to stop the syndicate at the end of 2023, and decided that, I've been doing this full time for 2 or 3 years. Now I'm 100% sure. It's more of, for me, it was like, try before you buy kind of experience. So I was sure at that time, that's the kind of commitment that I'm ready to do. I'm ready to raise a fund, be committed for at least 10, 15 years. That's how funds work. You need to commit at least for 10, 15 years to run the fund once you started.
Okay. No, also awesome to hear, and especially that you're Pan-African and you're geography agnostic too, when it comes to Africa. So with that being said, then I've noted some of the businesses that you've invested in the past, such as Elgamia and FinCare. So with that, given your remit is fairly broad, it would be great to understand maybe the key metrics or the trends that you see. I think it's always important to ask a fund manager whenever I have them on the show. Let's say you see one of those trends, how does that make it stand out towards other businesses that are around, given there's so many business opportunities for you and your company?
Yeah, I think and this is one of the differences that I felt that in especially in the underwriting or how you assess or evaluate startups in the Western world versus African. So essentially, we look at the same things, but there are different aspects. So of course, the team, the product, the market, and their plan to execute. In Africa, maybe this underwriting process comes with looking at other aspects that are maybe tied to the continent, like capability of the founder to work and operate on a cross-border approach. In Africa, it's 54 countries. Regulations are different, policies are different, languages are different, and everything. So it's very important to look at the founders, Number one, to make sure that they are the right, there is a right founder product or founder market fit. And then look at the market, that these are the people who are able and know how to operate in a multi-country setup, which is very, very important in Africa. If we looked at the large companies or the unicorns in Africa, most of them, if not all, they didn't reach this level until they were able to operate in at least 5 or 6 countries. So it's very important to look at the capabilities of the founding team, to have this. Of course, when we're starting, it's very hard to navigate that, because they spend the first 3-4 years definitely building in their home country or their home market. But it's one of the topics that we need to discuss with the founders and gauge some signals on how they want to do that, how they want to approach that. I think, yeah, that's the key part that we look at. As I said, the founding team, especially given that we do early stage, pre-seed and seed. So we don't look that much on the traction. We prefer that the company is post-launch, post-revenue, but we don't care about the size of the revenue. It could be like few hundreds of dollars. We don't really care. We care about the duration. If you have been in the market for 6 months, we want to analyze a cohort of users and maybe look at the consumer or the customer that this startup got in month 1, and look at month 6. Is this customer still there, or they churned out? How frequent did they use the service? Do they use their service on a weekly basis, daily basis, monthly basis, or maybe once every quarter? The revenues that you're generating from this customer, is it increasing, decreasing, stable? So these probably are the signals, not the size of the revenue, but these are the KPIs and metrics that probably we care to see, because this is how we build our conviction that this, once we pour in capital, they know how to translate this capital into more and more and more customers, and so on. So these are the signals that we need to see early on, not the size of the revenue, but probably the usage, the customers you're bringing, are they staying, are they attached to the service or not?
No, that's fascinating, especially like you said that you are focusing on the initial stages of pre-seed Series A. So it's always interesting knowing whether they are able to come large, they are able to scale. Sometimes, obviously, I'm sure you'll say we've got a strategy, so we do know many times, but it's often difficult to ascertain whether that takes place or not in the future. But I wanted to hold you on something, what you said about regulation and licenses being different across Africa. And one thing that's been put in place in recent times is the African Continental Free Trade Area. And it's been put in place since Jedar Capital's been around. So I'm sure maybe you've seen changes or differences or not. So my question is, you work with various startups that are looking to scale, looking to work in different countries. Do you think this trade agreement so far has made a difference? I know obviously it's still developing, evolving in the future, but what impact do you think this agreement has had in recent times?
Yeah. I love to compare the AFCFTA agreement to the probably approach of the financial inclusion that every African country said, yeah, we need to work towards financial inclusion, everything 10 years ago. So 10 years ago, maybe 15 years ago, when everybody was talking about financial inclusion in Africa and in emerging markets and everything, it didn't move with the government interfering or trying to set up the rules, or the traditional banks. Financial inclusion successfully happened in Africa when the digital catalyst that we call the fintechs came in and owned this initiative and decided, yes, we will be developing solutions that somebody in a rural area can open a saving account and can maybe apply for a loan and so on. So when I look at the AFCFTA, I think it's the same thing. It's a huge, definitely piece of regulation that I think the African Union have been working on it for tens of years. But I think the real jump and leap in seeing the AFCFTA a reality will again come from the digital catalyst. This time, I would call them, or I call the process, the economic trade inclusion. We need to include the informal sector into this opportunity. Because currently the FCFTA, definitely the main benefit, people who or entities that will benefit from is the well-established businesses that can actually leverage this export and import in mass, like maybe a cement factor moving goods from one country to the other. But what we look at and think that it's an opportunity as well is how can we include the informal sector, the same story that happened in the financial inclusion, that we included the unbanked individuals as well as the unbanked businesses into this financial system. Now every single small business, they can actually access through digital lenders different loans and so on, and the same for the informal sector in the trade. These are people who have maybe they cannot go and open an LC at a bank so that they can allow them to export their goods to another country. They cannot afford to do that, to go and open an LC and go to the traditional way. So I think this AFCFTA will create a new opportunity for the digital catalyst. I would say digital freight solutions, logistics, like starting from the first mile up to the last mile, moving things from the raw material sources to the the manufacturing side and so on, supply chain, B2B cross-border payments so that businesses can transact. Again, these small businesses, they tend to, because they're very close, sometimes they're working not even in their own country. They're just contained in working in their small single city. They cannot even, it's maybe a suburb area in a small city in Nigeria, but they don't interact with customers in Lagos because they don't have the means to do that. So I think these platforms will enable the small traders, the small manufacturers, suppliers, to start looking outside, like from a small city to maybe nationwide, and then they can aspire as well to work and leverage the FCFTA, given that again tariffs and customers are being removed gradually until they hit zero tariff in 95% of the goods by 2030. So this will create a huge opportunity for them. But again, platforms, they need the digital platforms to enable them to do that. They need escrow services, for example, because they don't know each other. Trust is not there. If we find a platform that we trust, then we can transact through this platform again. So no, we're very optimistic about it. But again, I would say we are, or I personally am, the realistic optimist, I would say. So we understand the challenges. There are a lot of infrastructure challenges, especially in the transportation, roads and rails and stuff like that. But I think things are working hand in hand. We started to see a lot of public-private partnership projects, building serviced trade routes, and I think this will start to reflect on the whole trade aspect across Africa as well.
Sure, no, it's an interesting take, especially what you mentioned about digitalization, and obviously you see so many unicorns and companies that are kind of dominating the stage across Africa. So you hope that that can be improved, like you said, in upcoming years, as well as tariffs being reduced and reduced to a point in which you said it can reach zero in many cases. Um, but leading on to this then, so maybe we can talk about the VC market in Africa in general, because as we mentioned, there's been a bit of an increase in the last couple of years, 2024 and 2025. There was an increase compared to the previous years where there was a massive drop relative to the highs of 2021 and 2020. I just wanted to get your thoughts then on the VC market, pre-seed all the way up to the Series B, Series C. How are you perceiving the market in terms of opportunities, and how are you perceiving this sudden increase again in investment in Africa when it comes to venture capitals?
Yeah, I look at it as a journey as well. So again, I think after the drop in 2023 and 2024, I think there has been a change in definitely the way VC funds do their diligence. So it became harder to get funding. Deals are, I would say, or funds are more selective than before. They look at the business unit economics more than ever. Their tolerance maybe to businesses that don't see exactly the way to profitability once they reach this critical mass, they're less tolerant. So they need to have a clear understanding. Okay, you will burn cash the first 2 years, but we need to exactly look at the numbers and how you plan to turn profitable. Because previous models has proven that in many cases you assume things, and you assume that once you hit a specific mass or critical mass, you will start to turn profitable. But again, it appeared that you reach a point where your costs need to increase because you reach this milestone. So then the profitability moved again, maybe 6 or 12 months. Then you keep growing, and to maintain this kind of growth, your cost has increased again. And so it's very important to look at definitely the unit economics and the profitability path in Africa. I'm glad that 2025 sure that we'll start as well to see some reports from the folks that have been publishing reports on VC every year. But I think we will see a significant increase back again in the numbers of venture funding across Africa. And as I said, I think there is, at least 2025, this is what I've seen. There has been some concentration, I would say. So a lot of capital going into smaller number of startups. Again, because as I said, the VCs has been very, very selective in 2025. As we recover, hopefully we'll start to see things a little bit different in 2026, where we will start to see some, I would say, risk capital expanding a little bit, rather than this high concentration in just only few probably sectors or founders as well, startups.
Yeah, no, that is very true as well. It's not just the level that's being invested; it's the number of investments that is actually taking place too. It's not great if it's just all in company A. It's not going to impact the economy as a whole sometimes. So, interesting to hear. And another point, obviously you mentioned of you were originally from Egypt and now you're in America, but I wanted to get your thoughts on maybe the relationship between North Africa and Sub-Saharan Africa and the
Yeah.
investment levels there. I found it very interesting, like I've said a couple of times, that you're Pan-African. But there are times that I feel that there isn't enough trade and investment between the two different regions. What's your take on this? And maybe your ethos into being Pan-African as well. I think the audience and myself would find that very fascinating to learn more.
No, I think historically, for many reasons. I mean, this
Mm,
definitely starts from, the colonial times and everything. But I think given the affiliation of North Africa to the Middle East and the Arab world, uh, this has created like a place where uh, companies and I'm not talking about startups in general, trade relationships between the GCC area, Saudi, UAE, Qatar, and the North Africa area. Also, proximity of North Africa, Tunisia, Algeria, Morocco to Europe. I think this created a lot of trade lines between, again, as I said, North Africa and Europe, North Africa and the rest of the Middle East and the GCC area. Um, but I think the past 10 years, this has started to change, especially with the growing middle class in Africa. So countries in North Africa started to realize that there is a huge opportunity and a huge consumer market in sub-Saharan Africa, and they started to approach that. I think also the AFCFTA will definitely play a role in that because again, especially this times. I mean, in the world we're seeing like this tariffs and customs wars and U.S. increasing the customs on many countries and so on. So a lot of companies that struggled into maybe export to the U.S. due to these changes, they start to see, okay, I mean, we are a country in Africa. Africa is 1.5 billion, and we have this regulation saying that they're removing customs and everything. So they automatically started to look at towards this market opportunity. Um, it still definitely needs a lot of work to be done because you're inheriting like a long heritage of depending on, as I said, North Africa depending on Europe and GCC and maybe India, China as trade partners. But we should look as well as, and I think we started to see this in the traditional businesses. A lot of, I would say, manufacturing companies, construction companies, infrastructure projects, large agriculture projects. Actually, we see a lot of cooperation in these areas between countries in North Africa and Sub-Saharan Africa, a lot. And I think usually startups follow because when you see your country is doing or trading, Egypt is doing like a trade with Kenya. This encourage even founders and startups to say, okay, let's go and look what's going on there, and it give them confidence as well. If our country is doing business there, so probably it is a place that is safe to do business in, then they're encouraged to go. So I think this changed the past 10 years, and I think it will keep changing with the FCFTA. And accordingly as well, it will encourage even in the tech sector, the startups and the founders to start look at Africa as an expansion model. And without giving like specific names, but one of our portfolio companies actually was a company in Egypt. And even though most of the companies in Egypt, when they think about expansion, they think Saudi, UAE, and Qatar and everything. But when they analyzed the market, they realized that no, actually Saudi and the GCC area, for the product that we're trying to to offer or the problem they're trying to solve, it's a very competitive market. And they found that their natural way of expansion actually is in sub-Saharan Africa. And they're considering actually two markets in 2026, expansion in two markets in sub-Saharan Africa.
No, it makes perfect sense. It makes sense when there's so much potential between the regions. So it's awesome to hear companies that are maybe moving from the traditional route of expanding towards Saudi and maybe going into sub-Saharan Africa, like you said. And I wanted to bring another point in which you talked about the US, and we talked about this a little bit before we started the podcast, so inside knowledge for the audience. But I'm very interested to get your thoughts on de-dollarization. It's been a kind of hot topic in the last couple of years. And when you're talking about Africa as a whole, we talked about the trade agreement. There's been talks in the very old past about there being maybe an African currency around. So I wanted to get your thoughts on de-dollarization and how this could actually impact startups, how this could impact in terms of debt finance, and too, where do you think this could go? And is this more just a flavor of the year or flavor of the month type of term, or do you see this actually taking place more and more in the years to come?
No, I think this has been a core part of the FCFTA as well. The FCFTA has created as well, or it's an initiative with Afrixim Bank. They created a settlement system in local currencies without depending at all at the euro or the US dollar, which is called the PAPS. It has been created, launched by Afrixim Bank. I think they're now active in multiple countries. I think they started with West Africa, so probably all Francophone, Nigeria, Ghana. They're now covered, most of the banks there. The plan is to cover the rest of the banks as well in East Africa and move to cover the African continent. And this essentially is a platform that can guarantee that there is a settlement between different traders, different countries trading in local currency. What used to happen is you need to move from the Egyptian pound to the US dollar, then go from the US dollar to Nigeria, then Nigeria converted to the Naira, and then you procure the goods and so on. So it becomes very complex, and sometimes even on the payment side, you lose because of a lot of spread. Once you do the Egyptian pound US dollar conversion, you go outside the continent, you go to a platform, there is like maybe 10% spread just because of the currency and FX exchanges. And then you lose another spread once you go back again to the normal or the local currency in the buying country. So I think this has been a core part to encourage trade between countries in Africa. And I think, the PAPS platform has been actually doing a great progress in the expansion. I follow actually their coverage, the countries that they're covering, and every quarter I find they're really advancing and covering more banks, getting integrated and creating our own probably African settlement system that depends just on our local currencies as well.
No, it's interesting, and I'm very fascinated to see how it holds in the future. I'm also interested, whether it's bad or good, how America can react to this as well, because obviously this isn't beneficial for them if other countries start trading in different currencies. So we'll see what the future holds there. But Sherif, we'll just wrap up now. So thank you so much. Really fascinating talk. I know we talked about all the way from phones and technology to fund management. So thank you so much for your time.
Thank you.
And you do many things, and I know maybe you haven't got the syndicate now, but is there anything you'd like to maybe plug or talk about for the audience to know more about?
No, again, our focus is really on we're fascinated by the digital trade sector, and we really see a huge opportunity in the digital trade sector, especially with the AFCFTA. So I think, yeah, we really look at the logistics, the supply chain, the cross-border payment, and as sectors that probably will change the continent. I think the AFCFTA, the next 10 years would be like one of the main catalysts in changing the economic, I would say, welfare of the middle class. Because again, as I said, the informal sector need to be included in a larger transaction, like, trading with other countries and so on.
Sure. No, definitely. And then I'm really looking forward to see how they do integrate that informal sector. And you look at where I'm from, Nigeria, it's such a major part of our economy, but sometimes it
Thank you, TJ. Thank you. It was great having me. Thank you.
It was great talking to Sherif. If you like this episode, please give us a like and subscribe. But that's all from us, and we'll see you very soon. Take care.